Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Tuesday, and a lot of people got the open that they probably wanted on Monday, right? Friday we had that jobs report, and we were down a lot more than most people would have thought. We broke some key momentum levels and created an environment where it's like risk off, let's try some levels, let's get some good setups and figure out where we might bounce or where we might not. You know, I talked about what needs to happen in a corrective phase and how to measure it, but knowing how to partake in it versus getting caught. And during the entire move, during I think March, a lot of people were shorting the move, rolling it up, getting squeezed out, and didn't stay long enough. So we said, if you're above the 8 and 21 day, you try and stay long. If you break the 8 day, you get a little risk off, but maybe stick with some things. But you break the 21 day, if you're active, you get out of the way. And in order for there to be a real correction, you have to then get through the 50, the 100, the 150, the 200, all that. So at this point, you know what? The sellers have been in control starting last week. And if you look at the chart of the SPX, you will see, here was the red dog reversal way back in January or February 2nd. From there, reclaim the 8-day and 21-day, and you had a nice methodical technical trend all the way to right here. And right here, it didn't look as if, we were going to sell off as hard, but you never do. Risk off happens pretty fast. And if you look here, you will see that, you had your first close right around the 8-day, and if you reduce the risk on this day, okay, after a huge move that we saw from, basically 1990 to reduce it somewhere around 2100, you probably felt a little bit bad about yourself here because it got engulfed. And I think one of these days I did also get a little risk off because it was getting choppy. Then I was like, you know what, we're probably fine. And then on this day was the day that pretty much we spent, a nice amount of time below the 8-day moving average. We closed at 2107, and on that day, I believe the 8-day was somewhere around 2110. So that was the day that I had a few longs, but I put on a hedge. I put on a spider hedge because for the first time, this trend was getting a little bit more faulty. Then on this day, we came in, tested the 21-day, so that became our new point of reference, 2087. Then you had an inside day, and then on Friday, got fully engulfed. So if you did not get out of your risk here, or you got reduced some, and then here you said, okay, I'm going to be in wait and see mode. When we broke this area, hopefully you got very flexible, and some people might have even started getting short in the brain and thinking short, because I remember on Friday's close, we were like, okay, we'd love to see it down open. Instead, we got this faulty rally that felt like crap, and basically never even got back to retest the 21-day. If you remember, on my recap yesterday, I was like, things that make you go, because that's the way the market felt yesterday. I probably should have played a song, Things That Make You Go Short, So, again, it's a whatever. There's not many songs out there like that. But a lot of the reasons that we were a little frustrated yesterday was because, market was up, the rally felt feeble, high beta tech was still weak, lots of momentum names were below the 8 and 21 day, things couldn't rally. I think Sperling was in like 8 longs and he lost money while the Dow was grinding higher. So it was all things that make you go, So now I feel like this is when, some of the shorts out there, in the thesis of a CNC Music Factory, are feeling a little bit better. They might be dancing a little bit. Shorts might be dancing, but also anyone that wanted to buy a dip that probably felt like they were chasing last week, now's the time to get ready. Now's the time to put together a plan with pivots like we've been doing. And at this point, there's nothing really to dance about except for that, we do have some volatility, traders can trade, and there's time for opportunity. When you correct, it gets a little stressful, but if you're planned with the right setup, perhaps you could, you can make some progress. Because I know up here, if you look at the chart again, I know in this area I was getting a little frustrated. This was that meaty area to get really long when we took out that, the 2064, when we had commitment to this move down here. You had some power through the prior high, and then you had a little continuation. But I remember in this spot, a lot of us were like, we didn't want to chase, shorting really didn't work, and there was very far and few and very narrow setups. So anyway, this is what you write down for tomorrow. Write down 2046. That is what we know. This is your pivot. Okay, we'll see how we open tomorrow. Best case scenario to open would probably be, move lower to this little pivot here, maybe to the 150-day at 2040, and then some type of reversal up. That would be something that I think a lot of traders would love to see, especially if you're going home flat. I'm going home flat. Some guys who say, you know what, the easy trade doesn't happen, they might open it up tomorrow, I'm going to be long some. So, if you do so, you then have the luxury of maybe partaking, okay, on a rally up or a gap up. Maybe you also get a little gap up, it trades below 2048, puts in a low at the moving average, comes back up, gives you a red dog reversal, and then at least we have a price point for a potential retest of this 50-day. So at this point, all you know is the pivot, you know the 100-day, you know the 150-day, and you know where the 200-day is. What you did know prior was reduce risk at the 8-day, hopefully be pretty neutral here, and if you have leftovers, maybe you get a little hurt, whatever, or maybe even get short. Or I know a lot of guys, I remember yesterday I tweeted, I'm like, market's getting rejected by 2080. The easy part of that bounce is over. Some guys were saying they were getting shorted. Unfortunately, I did not get short that. But anyway, we'll see what happens next. So I really can't go through a lot of charts right now. I'll do tomorrow at the morning call. I have a webinar. If you want to go in the front of you can get the link at T3 Live with Bob Lang, who goes over options. He's really good. We're going to go over actually the red dog reversal strategy. We're going to look at some past examples. I'm going to go over what to look for moving forward the next few days. Real quickly, you just look at the same thing for everything. You look at the Russell. Russell actually had a move off the lows, which we'll see what happens there. Look at the Qs. For tomorrow, same similar thing. Broke the 8-day right here. That was one spot to get out. Broke the 21-day, closed on the lows. You write down 105.72. Okay, tomorrow I think we can get some potential. Right here it's actually almost there, which is the prior breakout, or maybe into the 50-day, which is right here. So there's going to be opportunity. But again, you only have the opportunity if you're embracing it, if you're out of the way, if you're not caught, and you could think clearly. So think clearly. It's going to be a lot of dancing going around between the shorts and the longs and figuring out what to do around these adjustment areas, but you need the adjustment area in order to think clearly and make that decision. Got to jump. Sorry for being short. Tune into the webinar. I'll see you tomorrow at the morning call. Have a good night.